let's get you the impact of Budget 2025 on your finances, on your wallet, and what these changes in the income tax slabs would mean for you, the tax-paying citizen. First up, let's quickly recap what have been the key personal finance changes made in Budget 2025. First up, the income tax relief. Now, we try and decode with this change in the new tax regime and the slabs as well as the threshold of income, how much will you end up saving on your taxes? Number two, there would be no TDS for senior citizens drawing interest up to 1 lakh rupees. Remember, this has been upped from 50,000 rupees being the limit earlier. So we understand what are the simplifications could be perhaps in the offing as part of the TDS changes that Finance Minister talked about. Next up, all international spends up to 10 lakh rupees would be exempt from TCS. Is that right? Or is the exemption only for education loan and remittances on education up to 10 lakh rupees? That's what we'll try and find answers to today. And then self-occupied houses, there has been a change in that as well. What has been changed in Budget 2025 and what it means for two self-occupied houses and not just one by way of your tax implications. And finally, there's going to be a new income tax bill which would be tabled in Parliament this week. What should we expect on direct taxes? And well, simply put, is this one of the first instances where we will see the old tax regime get out of the way? Joining me to discuss this and more is a very special guest this morning, Ravi Sawana, partner Lakshmikumaran Sridharan joining in. Good morning, Ravi. Thank you for taking out time this Monday morning. Let's start at the very top. Massive relief on income tax for the middle class salary earner. Now, Finance Minister has gone ahead and said that tax benefit could be as much as 1.1 lakh rupees. Take us through what these changes are and which classes of taxpayers and salary earners end up saving how much.
So, thank you so much. The finance minister said that no tax up to 12 lakh rupees, but that's actually a misnomer. If your income is up to 12 lakh rupees, then obviously whatever is the tax amount, you will get a tax relief. But if your income is more than 12 lakh rupees, but up to 12 lakh 75,000, then also you don't pay any tax because you get a rebate of
75,000, Ravi, that you're referring to is the standard deduction. So what we are talking about is salary of 12 lakh 75,000 rupees. 75,000 is standard deduction across the board, and hence no tax to be paid for salary up to 12 lakh 75,000 rupees. Am I right?
No, that's where I'm coming to. It's a misnomer to say that no tax for any person. It's not a basic exemption limit of 12 lakh rupees.
Okay.
If your income is 12 lakh rupees, no tax. Say if your income is 15 lakh rupees, then this 12 lakh is not the exemption that you will get.
That's right.
You will have to follow the new regime which the finance minister has provided, which is 0 to 4, 4 to 8, etc.
All right. Which class of salary earners end up saving how much actually?
So any class of salaries, so depends on your bracket of salaries. So it can the amount can vary. And if you look at the FAQs, they have provided a detailed amount, like which class of salary will get how much. So if your salary is 12 lakh, you don't pay any tax. If it is 12 lakh 75,000, still you don't pay any tax. But if your salary goes beyond 12 lakh 75,000, then you will have to compute your tax as per the new tax regime, which I mentioned earlier is 0 to 4, 4 to 8, etc. So definitely this new regime is much more beneficial than the old regime which existed prior to this finance bill. So depending on your tax bracket, you will have to compute your tax liability. And certainly the tax which you will pay in FY26 will be lesser than what you had paid in FY25.
All right, and let's look at these tax slabs also, which and the comparison between the existing new tax regime tax slabs and the ones that have now been proposed in budget. So if you look at the main difference that also comes for those who are drawing salary between 15 lakh rupees and 24 lakh rupees per annum. Remember, in the previously and presently applicable new tax regime, Salary above 15 lakh rupees is taxed at 30%. Now that goes up to 24 lakh rupees in the case of the 30% tax slab. So is it fair to assume, Ravi, that those who are drawing salary between 15 to 24 lakhs are also some of the beneficiaries of this newly proposed tax structure?
In fact, if you look at the comparison of the two tax slabs, the benefit goes to each and every one, starting from 0 to 3 to say up to beyond 15 lakh, because 0 to 3 gets an additional 1 lakh rupees of benefit. If you're drawing 4 lakh rupees, you don't pay any tax. 7 lakh becomes 8 lakhs, 10 becomes 12, 12 becomes 16, and
Right,
then 15 becomes 20 or so.
right.
So the benefit is to each and every class of category of salaried person or any other person who is earning income other than salary.
Okay.
So a lot benefit to the middle class taxpayers who was looking for income tax benefit for so long. And finally, this budget has provided much needed relief to them.
All
So
right.
they'll have like more money in their pocket to invest or to spend on their household.
All right. And let's now shift focus to, Ravi, the changes in the TDS and the TCS. Let's begin with TDS. Finance Minister said that concession for senior citizens who draw interest will now be exempt from TDS up to 1 lakh rupees. This is up from 50,000 rupees earlier. The Finance Minister also spoke about simplifying TDS. So what do these changes and proposed revisions in TDS? Let's begin with TDS. We'll come to TCS later. What do these revisions in TDS really mean for those who do pay that 10% TDS on whatever income they get?
So TDS is deducted on different kinds of income. Like for rent, it is deducted at separate rate, commission separate rate, salary separate rate. What this finance bill has done is that it has increased the minimum level up to which you don't have to deduct TDS across the board,
Okay.
not just senior citizen, not just one particular class of income. So across the board, wherever there were limits, earlier if the limit was 5,000, it has become 10,000. It was 50,000, it has become 1 lakh rupees. If it was 1,80,000, it has become 2,40,000 in the case of rent. So across the board, the TDS basic exemption limit, so to say, has increased. So the compliance burden on companies or whosoever was liable to deduct TDS has eased to a certain extent. That's on the monetary part. Other than that, there is no as such simplification.
Okay.
The one big change in the TDS is that if you're a non-filer income tax return, as a deductee, if I don't file my return, then there is additional burden on the deductor to check whether I'm a non-filer or not. He will
Okay.
have to go on the compliance portal, check whether I'm filing return or not, and accordingly apply the rate of TDS. Because if I'm a non-filer, the rate of TDS is 20%. So
All
that
right.
additional compliance burden on the deductor is very harsh.
Okay, and talking about the compliance burden on the deductor, talk to us about the changes in TCS. I remember about 2 years ago or so, there was this hot debate on TCS for international spends was now capped at, was in fact the limit was up to 7 lakh rupees. Now, Finance Minister has said that foreign remittances up to 10 lakh rupees will be exempt, but is this 10 lakh exemption only for students who have availed an education loan, or is this across the board?
You're absolutely right. It is only for those students who are traveling abroad for education and taken loans. It is not across the board.
Okay, so only students who have taken an education loan and the amount being remitted out of the country is 10 lakh rupees, then there is, or more, then there is a TCS exemption of up to 10 lakh rupees, but the standard 7 lakh rupees TCS on all foreign spends continues to stay intact. All right, Ravi, I want to move on to this change in self-occupied houses. Now, Finance Minister said that instead of availing the concession only on one self-occupied house, you can now avail a concession on two self-occupied houses. What exactly is this concession and who gets to gain by declaring two self-occupied houses?
So prior to this finance bill, if you had one self-occupied house property or the property which you could not occupy because of your business reason and you had to stay away from your house, then the annual rental value of that self-occupied property was not treated as your house property income. But now that has completely been done away with. Now there is a simple exemption provided to two house properties which I'm self-occupying for myself, and that's all. So earlier, if you had two house properties, you pay house property income tax on one of the properties, but now on both of the house properties, you don't pay any tax. So that will certainly increase the housing sector.
All right. And before I let you go, Ravi, I want to understand your expectations on the new tax bill, the new income tax bill, which Finance Minister has promised will be laid out in this week, starting today. Is it pretty much a goodbye to the old tax regime, or do you think the old tax regime is there to stay, but it's just going to be simplification of the various elements that go into the fairly complex tax bill that we have right now?
I don't see it being a complete revamp of the existing tax law. The finance minister herself said in her speech that majority or 50% of what the current income tax act is will stay in the new income tax bill. We are looking for the simplification of the tax law, which exists today. We are looking for the tax law to deal with the new various business models like AI, etc. And we are looking at the new income tax bill that will provide uh, tax administration to work with businesses rather against the businesses. So on tax administration side, tax simplification side, there's a lot of hope. It's not going to be a complete revamp of the existing tax law. Existing tax law to a certain extent is going to remain same in the new income tax bill. Yeah, but the simplification is going to be the theme of the new bill.
Okay. And do you expect the simplification primarily again to come in line with what the government has been trying to do, which is simplification of appeals and the scrutiny and trying and building this trust in the ecosystem, which Finance Minister even spoke about yesterday in one of her interviews after the presentation of Budget 2025?
Litigation is the main pain point of any taxpayer. If your litigation start and if it goes up to Supreme Court, it takes around 20 to 25 years for it to get resolved. And presently, the income tax appeals are pending at the first appellate authority before the National Faceless Appeal Center, and which is leading to tax adjustment of refund for subsequent years. So we are hoping that the stricter timelines will be provided for the appellate authorities to resolve the tax dispute so that the things can move forward. If things are stuck as on today and which is harassing the taxpayers.
All right, Ravi Sawana, thank you so much for taking out time this Monday morning and joining us right here on News 9.